like there is no one way to trade. Like everyone trades so different, and there's little nuances that are different from every single body. Sure, we might all someday trade the same overextended chart, but I may enter somewhere completely different from Nate and from Phil, and Phil might hold it longer than all of us. Like there's like all kinds of plays. So I appreciate you guys sharing just like the idea of how y'all analyze our worst day, or how you use the data, because I know there's a lot of people who might not be doing that, and it can help them grow their account themselves. Welcome back, everybody, to Be the Trader. Today I have two very special guests. They are return guests. They've been on previous episodes. Nate Michaud from Investors Underground has been on the show quite a few times. We've talked about some important topics. I've also have Phil Goedeker, who's also back. And he's been on the show a couple of times as well, providing some great content. And a lot of you guys have asked for them both to be on. So I was like, you know what? Let's bring them both on. So we went ahead and did that. They both agreed to be here today. So thank you guys for joining me on the show.
You bet.
What's up, Al? Happy to be back.
Awesome. Well, let's start by, answering a question from one of the subscribers who commented on one of the videos. He asked, do you use TraderView to analyze all your trades? And do you think it's helpful to have others look at your data to see what you're doing wrong and what you're doing right? Thanks, Jeff Co. So whoever wants to start off with that, and we'll take it from there.
I can go. I do look at TraderView. It's not something that I do religiously. I don't do it every single day, every single week, but I'll take it like quarter by quarter at times. And it's good for a couple of my brokers. E-Trade, you can, I guess, import it, but you have to like copy and paste your entire log throughout the day, which is just, I'm not going to do that. If there was a way to auto import it, I think I could get a lot more information. But, the main things that I look for there, or at least that I take away from there is, what days I'm the worst, what times I'm the worst. And, really trading is about staying away from what you suck at. And if you're the worst trader on Monday mornings and Thursday afternoons, then, be aware of it. And when that time comes, either take the foot off the pedal or make sure that you're following your risk management.
And I'm going to interject before you answer, Phil, because I just want to, before I lose my train of thought here, I'm curious real quick, Nate, you mentioned on like what days you're bad at. Can you give an example? Like, did that ever happen to you when you were trading at the beginning or some period of your trading career?
Yeah, there was like it was kind of a joke for a little while, but they were just like, you should just take Thursdays off. For whatever reason, it was like my worst day, and it wasn't just 1 week. It was literally every week for weeks, or if not months, quarters, whatever. And so yeah, there is a lot that you can learn from that, as well as like taking the foot off the pedal in the pre-market on Monday. Sometimes we get all excited about coming back to the market after a long weekend. And, you end up underperforming, not necessarily bad, but like underperforming because you try to take this pre-market trade and you try to make it work throughout the day rather than just, wait for 9:45, 10 a.m., get on the right side of a trade. Because otherwise you end up holding that thing all the way till 4 p.m. and you end up screwing up your, what could have been a fantastic Monday.
What did you end up doing whenever you found out like Thursdays was just like not the best day for you? How'd you approach that? How'd you like look at that? Or like, what did you do to find out what it was, or how'd you fix that?
It just kind of became a joke, and then started recognizing like, hey, it's Thursday, be aware. And, I started becoming aware of it and just making sure that I made the right decisions on those particular days.
Awesome. And pre-market, because everyone's going to face this. They're not going to listen to this after Martin Luther King Day when the market's closed, but there's going to be another holiday that's coming up when their market's closed either on Friday or Monday. And you're right, people are antsy, especially when it's just Monday after the weekend. And so they may be sizing too big or whatever it is. What would you suggest? I know you said briefly that you don't want to maybe start pre-market, just kind of avoid it seemed like, but what would you suggest if someone has that problem where every Monday is their worst day?
Just stop and wait until 9:45, 10 a.m. plus. I mean, a lot of times, unless I'm super prepared for something and it's a huge chart, it's overextending, I'm ready for this, parabolic short to react off the open, then I'll take that trade. But if not, there's been, probably the last, I would say 2 months, I've taken the least amount of trades through open, meaning like 7, 8 a.m. all the way through open. I've taken a lot of pre-market trades, completely closed them out because a lot of times they gap up, fade it down, and then squeeze into the open. So what I've noticed and what I've been a lot better at is just being patient and waiting for 9:45, 10 a.m. plus. And 100%, I take note on Monday, like, hey, it's start of the week, and you can really set the tone for the week ahead. If you smash on Monday, you're just going to be in that better of a mindset for the rest of the week. If you start out on the wrong foot, then, I'm pretty good at kind of resetting and just, whatever, get to the next day. But for a lot of traders, it's really how you take that first step forward on that particular week. So, foot off the pedal, wait for those setups. And the thing about the market right now is there's so much range. You don't need, if you go back 6 months, it paid to maybe take on a little bit of risk of being early to get that liquidity, get that entry, get that opportunity. But right now there's just so much range that you don't need to be on the front side. You don't need to be first in. And quite honestly, it's the most risky when you have situations like GameStop that are literally doubling from 20 to 40 in a day. We've never seen some of these things before. Yeah, sure, we've seen it on low float stocks, but not big real companies that are literally doubling. And if you're not aware or positioned correctly, there's your account.
I agree. And one thing that I personally do, but just to add to that, and then Phil, don't worry, my man, you're coming right after this point. I used to always personally size in too big pre-market, and then that could really mess up your day. And so now it's like I size in so small. I think it's after talking to you one day, Nate, where you were like, you size in way smaller when it comes to pre-market, depending on the setup. But I just cut my size to where almost it doesn't. I shouldn't even be trading because it doesn't matter.
You can
but I agree with that.
Get a feel for it pre-market because late 2020 and early 2021, they literally walk it up and fade it into that VWAP level, creating the trap. And it's either going to break and fade off from there, or it's going to hold, trap, and go. And you don't need to have risk on to figure that out because there's enough range for you to make it either way. But if you're too sized, thinking it's going to go down and it swipes up, you're screwed. And like I said, that's how you start your day, and that's not how you want to.
No, it's not. Well, Phil, and so what's your take on that question? I'll reread it real quick just to refresh you. But it's, do you use TraderView to analyze all your trades? And then do you think it's helpful to have others look at your data and to see what you're doing wrong and what you're doing right?
So I do not use TraderView to analyze my trades, but I've been a big proponent of analyzing trades for years. I spoke about it in Vegas several years ago. I think it was my first speech about how important it is to analyze your trades. Now, 2020, was a completely different year, something we've never seen before. But I think one of the biggest reasons to analyze your trades is to get your niche set up, right? Find your niche set up, find what you're really good at as a trader, and try to excel at that. And, there's so many hot themes in the market lately, whether it's, buying SPACs, IPOs, Bitcoin, cryptocurrencies, shorting low floats, there's so many hot themes, right now that, there's a lot of different things in play. But I think overall as a trader, one of the biggest reasons to analyze your trades is to find out what you're good at and weed out, I think Nate said that, weed out what you're not good at, whether it's certain types of setups, whether it's certain types of the day, times of the day, days of the week, days of the month. I actually kind of found out several months ago, it took me a little while to figure this out, but the first day of the month was always kind of poor for me. And why was that? I wire out constantly, but on the last day of every month, I wire out all of my accounts, 4 or 5 of the accounts. I take them back to exactly where they were at the beginning of the month. And I found out, the first day of the month was always kind of weak for me because I was eager to make, to have a big win and start out the month strong. And I was trading the first day of the month kind of poorly. So that helped me, size down, kind of change my mentality on the first day of the month and try to get back in a groove. But analyzing your trades is so important, whether it's, really, I take a firm look at all my trades at least monthly. But daily, I take a mental note of, not even just my trades, but how the market is trading in general. Like Nate said, some days, shorting pre-market is great. Other days, shorting pre-market, you're going to get crushed. Some days, shorting pre-market right till the open is great. Then you have to cover. So the market is constantly changing, constantly adapting, and analyzing your trades is great. As far as having somebody else do that for you, I think that's great if you can. I think it's always important to have, if you have a mentor or somebody that you look up to, somebody that kind of has more experience than you do. If you can have that, someone else's opinion, that's never going to be a bad thing. The more, all the help that you can get in the market is just going to help you out. So I would totally agree with that.
Yeah, I agree with it as well. And I think you guys both brought up the idea. Well, before I bring this up, having someone, it used to be really hard for me to have someone look at my trade sometimes, because then I realized I was closed-minded for the longest time. Like I would hear something, and instead of, I was thinking the impression of, no, this is my way of trade. I need to trade this way. It's my style. And getting other people's opinions sometimes would mess up that way of trading. Right. And so, but over time, I've learned that, maybe if I talk to you, Phil, or talk to you, Nate, I know we don't do that now, but if I did do that, I have some people I talk to now where I'm able to okay, let me hear what you have to say and hear your point of view, because obviously you're successful with the way you trade, and it'll help me see things differently. Because if I question how you see what I'm seeing, it helps you kind of see different points of views. And one thing that's unique that I've learned from all of y'all, like every single person I've ever brought on the show, all of y'all all trade completely freaking different.
Right.
It's like there is no one way to trade. Like everyone trades so different, and there's little nuances that are different from every single body. Sure, we might all someday trade the same overextended chart, but I may enter somewhere completely different from Nate and from Phil, and Phil might hold it longer than all of us. There's all kinds of plays. So I appreciate you guys sharing just the idea of how y'all analyze our worst day, or how you use the data, because I know there's a lot of people who might not be doing that, and it can help them grow their account themselves.
Well, that's why analyzing your trades is so important, because we might make money the same way shorting a parabolic, but I know some traders that will short a stock at 4, add at 420, add at 440, add at 480. They're just so confident it's going to break, and they're right. I mean, they will make money on it, where my style is wait for it to break, and I'd rather add going down. I'd rather slam the bid, add while it's going down, add while the trade is in my favor. So again, it's just like you said, we can all make money trading the same ticker or the same way, but we just have different styles to do that. So analyzing your trades, you're exactly right, can really help you, find out what you're doing great, find out what you're doing poorly, find out what you can improve on. There's no doubt about it.
It's cool that Nate,
it's all about your risk appetite too, right? So like Phil said, some people can do that. They can add, they're confident in the data, they're confident in their research, the fundamentals, whatever it may be. But for me, I don't want to go upside down. I don't want to be stressed. I don't want to I'd rather make a little bit less. And like Phil said, I have no problem adding and adding and adding as it confirms my thesis or idea. And a lot of people, if I post a chart and stuff, they're like, what the heck? You were adding when I was covering, but that's something, and I've learned that from Phil too. One of the biggest things that I learned from Phil, maybe, I don't know, 8 years ago, 10 years ago, was, I'd wait for this perfect setup, and, the goal is gap up, parabolic, but nope, it gapped down. Well, if I think it's going to go down $2 or $3 and it's only down 50 cents, why am I ignoring that? So that was one of the biggest takeaways that, by, like you said, checking in with other people, seeing other people's trades, things like that. You can always learn something to better yourself. And that's been a huge, part of my trades and P&L, is just not ignoring it just because it didn't gap up like I wanted, because it's still probably going to go down. I wanted it to go down 2 or 3 more, and it's only down that 50 cents. So there's still that 2 or 3 that I can make. And like we talked about, I think, Alex, last time, is wait for the dip buyers to become pop sellers. And then you're on the right side of the trade, scale, scale, scale. And right now, the most important part is taking advantage of those air pockets, on the flushes, because if you don't, then you're just going to be, like the rest, trying to find the top, waiting, getting frustrating, and getting squeezed out.
I think you guys both mentioned just now the idea of you'd rather be on the right side of the trade and add while it's working for you. So I know people are probably hearing this and they've either tried it or maybe they're thinking about trying. I know a challenge with this because personally I add, I'm sure you guys mean, well, maybe, I don't know, which maybe you mean add on pops or just add while it's working. I know you said slam the bid. So to clarify, and the question is going to be, what about your average? Are you at all concerned about average? Are you more focused on dollar risk rather than average? Or like, what's your thought process? Because some people are thinking like, go ahead.
At all. Sorry to interrupt. No, I like that question because I really don't look at my average. I know a lot of traders do, and they say, oh, I don't want to crush my average by adding low. For me, we've seen a lot of stocks in the past year go a lot further than anybody thought was possible, right? I mean, even a stock like QS went from 10 to 125 in about a month or so. So shorting lower, does not matter to me. But what I really like or what I get excited about is once either the algorithm leaves, the algo leaves, or the momentum dies, because it's like Nate said, even though something gaps down or even though something's lower, it can just go a lot lower. And we've seen that time and time again, that you don't have to short the peak. You don't have to short the top. I think even trying to do that a lot of times is a fool's game. Is that, these stocks are going higher than we think, wait for them to pop, and there's so much air underneath them, you don't have to catch the top. I'd rather be a little bit late, take a little bit less, but it's a lot less stress, shorting once they break than trying to catch the top.
But is that in terms of the elaboration of worrying about your average versus like, what are your thought process? Like, what are you thinking then when you're adding and it's working? Like, go ahead.
Yeah. So usually when I enter a stock, I usually have an idea of kind of where I want to cover, to be honest with you. So as long as I still think I have a good risk reward, I'm still going to add, there's no doubt about it. But as far as my average, to me, it's just a number I don't even really look at. It's more of when I enter stock, I think, okay, what potential downside do I see? If I short a stock at 4 and I think it's going to go down to 3 and I have confidence it's going to hit 3 today, I'll short more at 375, 350. I may even add some at 340. It's all about where I think I'm going to get out. It's just not about my average. I personally don't look at it that often at all.
Cool.
Yeah, I'm very similar. It's about protecting your average, right? So, you don't want to just start in with 20,000 shares and slam 50 and ruin your complete average, because that might bring in emotions that you got to deal with. So it's always about protecting it. But like Phil said, it doesn't, if the trade's right, it's working and you've got a risk in mind, that's what it comes down to, because we're not long-term investors here that are trying to have the best average and we're going to do like lot selection and sell out, different lots at a time. It's not about that. It's about shorting higher, covering lower, or buying low, selling high. And that's really all it comes down to. So, as something changes, you can adjust your size. And, for me, the other thing to kind of think about it, you can trade around that core. So if you've got that fast move that you were expecting, you can go ahead and lock some in and then look for pops to re-add, and that'll screw up your average. But keep in mind, you've got a nice realized gain now.
Amen. And y'all both said something at the beginning in the first question, and it was referencing how so much has changed, just referencing how so much has constantly changed this past year. So 2 questions. The first one is, do you think that's going to continue this year? And then the second question is, was there a lot of the things that you had to do personally? And what was it to adjust to that change? I know, Nate, you kind of answered some of that in our last interview, but Phil, I haven't been able to ask you that. So maybe we'll start with Phil and then go to Nate.
Yeah, I'm curious if Phil's starting to get long more. I actually was going to ask him that.
I think 2020 was a year where you have to adapt, and you see all these moves, and the market just goes straight up, right? I mean, the market just went straight up. So 2020 was my best year of going long ever. And you didn't even have to be good at going long. You just had to buy. I mean, if you bought, you were going to make money. You were just going to make money. So as far as does it continue, I really don't know. I hope so. But that's the nice thing about being a day trader is whether it continues, great. If not, we'll adapt and make money in a different way. My hope is that it does. I know there's more stimulus money coming out, and I think a lot of people are probably going to put their stimulus money in the market. So we'll just have to wait and see. But I forgot, what was your second question to that, Alex?
All right, how did you adapt? But I think you kind of answered that. You said you've been longing more.
Yeah. I mean, when you see even these SPACs, going public and these EV, whether they're charging companies, electric battery companies, whatever they are. I mean, if you were long SPACs, you were going to make money. So even especially in the fourth quarter of 2020, I long more stocks in the fourth quarter of 2020 than I probably ever did in my whole life combined. And it was just absolutely incredible. But you can only sit on the sideline so long as a short seller and say, okay, I need to join the party going long, or what am I doing here? So, but again, that's one of the nice things about being a day trader is you can adapt and you have to adapt, right? If you don't adapt, you're going to die, because the market is constantly changing. We saw in June this past year, I don't know that there was a day in June where a small cap was not up at least 500%, sometimes 1,000% daily. So if you were not adapting, if you were shorting pre-market or you were shorting early, you were just going to get absolutely buried. And how did we adapt? You wait after the first hour, 2 hours, or just around lunchtime and short, and almost every one of those faded hard in the afternoon. So the market day to day, week to week, month to month constantly changes, and your brain has to identify that, see that, and make the changes with it. If you want to succeed, you want to move forward.
It's funny you say that because I took a beating. Like at first, I personally was killing it at the beginning of the year because it was just like everything was just fading. It was normal. Like things would just pop and fade, and I would just hold all day. And then we went through a period where everything was not ending until like midday, 1 o'clock, and then they start to fade. And I wasn't adapting. I was like, man, things are not working. And so it's interesting you said that because like I've been trading way less than both of you guys. And so I've only been trading for like 3.5, 4 years. So that's significantly less than you, but I'm starting to see and live through the adaptation where I've been adapting this year. The last quarter I've adapted ridiculous where I'm longing now too, just like you two. And it's just like, I always preach like I never long, and now it's just cool that you long, Nate longs. I'm just like,
reverse shorts.
Yeah.
Well, you wonder really here at top. I mean, if we're all going long, especially me, it makes me really second guess. It's like, okay, is the market topping right now? When I've preached for 10 years, stick with what you're good at, and if you're not good at it, don't do it. And I've done that my whole life. Don't go long because I suck at it. And now my brain every day is, what am I going to buy? What's the hottest SPAC? It makes me really. Okay, is the market topping? You don't know, but we can play it day to day, change and adapt. So
and that's adapting. That's adapting firsthand, right? And like I told you, I think in one of the prior episodes, there was like a 2-month period. I don't remember how many years ago it was, but I was doing the same thing over and over on shorts and low floats. And Scott at Centerpoint one time was like, what's the definition of insanity? Doing the same thing over and over and expecting different results. Well, if you're coming here into the market every single day and not thinking that this hot stock is going to continue to go and not getting long, I mean, if you're expecting that that's not going to happen, then you're crazy. Like you have to, and even Phil, adapting and trading is 100% always about adapting. And if it is long, if you have a tough time with getting long, then you have to practice patience, obviously. But and to answer the last part of your question there about like, where do we see the market going? What do we see? Will this last forever? I think it's going to last a lot longer. I would think at least another 6 to 12 months minimum. I think that a lot of people have made a lot more money than you can imagine, like a lot of a couple $100,000 accounts to a couple million, a couple $1 million accounts to 50 or 100 million. And these are just individuals. These aren't funds. We're seeing ridiculous numbers. And I think that all of that liquidity is going to continue to create opportunity throughout the next year or two. But, take it one step further. You're talking to a lot of, Phil, as well as many others, like some of the greatest short sellers that are out there. So who cares if it ends? Because when it starts to roll over, you've got the best short sellers in the world ready to go.
Yeah, absolutely. And you guys mentioned something earlier too, and that was, during the adaptation, I'm very curious. I know with Nate, you've kind of been mix of long and short over time already. I know you've been more focusing on long now, but Phil, you've been more of a short seller biased person. And so when you adapted to long, how did you do that in terms of, and then Nate too, like what would you suggest someone who's mainly a short side like Phil to adapt to long? Should they like, I don't want to give you the answer or give you an answer. What would you suggest someone to do? Like, or what did you do?
Well, for me, I had two different accounts and two different time frames. So I still, even though I bought more stocks in 2020 than I've ever done that, I was still every morning focused on shorting. As a day trader, I'm focused on shorting, but I had a complete separate account where I would buy stocks in it. And that account, I really didn't focus on it daily. I'd log in the morning, see where it's at. If I want to buy a stock, I did. Maybe check it one more time, and that was it. But my day-to-day focus was still, shorting. So I would say, for me, it worked out easier to separate those two, where I didn't have to, freak out about my longs. I didn't look to take profits after 50 cents like I've usually done my whole life. Buy it, hold it, look at the end of the day, look at the end of a few days, and just kind of forget about it. And then I'd focus, 95% of my focus on that day was still shorting. Usually at the end of the day, I'd analyze charts. I'd look at, do some research, see what SPACs are out there, see what's moving. And I'd usually buy those breakouts the next morning. But I wouldn't focus on the longs during the day. I kind of buy, forget, set my focus as to what, I like to do is sell short.
And Nate, what about you, my man?
Yeah. I mean, I agree with the whole, second account thing. I have everything spread out, different time frames, different accounts. And even like if I wanted to short swing something, I'll keep it in one account. If I want to go long, I'll keep it in other accounts for the swing. And I think that's an important piece, because if it's right in front of you all day, one, you're not going to let it work. Two, it's going to start to take your focus. And three, if it jumps in whatever direction that either you were expecting, you're out, or not expecting, you're going to stop out. And, you look back in 2 or 3 days or a week, which was your plan, and it does exactly as planned. So, you really got to separate those two things so that you're focused on, what you should on each account. And I think the other thing too, Phil was kind of talking about, scalping, for 50 cents here and there. I think what you'll see with a lot of great traders as they excel, and I picked this up from Phil as well, is you start to expand your playbook, but like a much bigger time frame. And it's no longer about trying to get, from here to here within the hour. It's about, how do I go from here to here by the end of the day, or, in a couple of days. And that's been my biggest change over the last, I would say, 6 to 8 months, as far as the long side and the IRA. I mean, it's been a complete game changer. And it's just about thinking about big picture setups and just repeating every single time you see that setup over and over and over again.
It's almost like you've been day trading for so long. It's like, okay, I want less stress. Let me trade the longer time period. Like, I agree with you guys. With the multiple accounts, obviously I have smaller accounts, but I have an IRA account for swing trading my longs and so forth. But something, before we start to wrap this up, I wanted to ask you guys both this question, and it's, oh my gosh, every time I want to ask you guys, so it feels like it's slipping away. I think it was something around the fact that you have traders who are learning how to trade in 2020. And so the question is, how do you suggest traders? How do I ask this question? Are they learning the wrong lessons by buying anything that's moving up? Like, how should a trader who's new at trading in 2020 and had a good year, it's their first time ever trading, how do they really analyze that and say, I'm doing the right things versus I'm getting lucky? There's a difference between you can make money and do the wrong thing. So I'm trying to understand that.
It's tough, obviously, because it's hard to convince somebody that they're doing it wrong. If the price is always the one that wins, right? So if it's going up, then they're right, and then they're not doing anything wrong. So they're continually being told that they made the right decision. So look, it's makes sense for right now. Will it always make sense? No, and that's when it comes down, just like we talked about last time, process and risk management and all that kind of stuff. We haven't had a lot of intraday offerings. We haven't had a lot of overnight offerings. And actually, a lot of the offerings are getting bought up right now. So there will be a time when people start to be oversized and over leveraged. And, had they done a little bit of research, they probably could stay away from that type of situation. But it's difficult right now to tell somebody that they're being reckless or they're doing something wrong when things are going straight up. At some point, yes, it's going to catch up. At some point, they're going to need to either develop a process or run out of money. But I wish a lot of people would, exactly like you said. I mean, it's, how do they know? Because honestly, you only need to get rich once. And a lot of people are rich right now and they don't realize it, and they're not going to realize it until it's gone.
No, I think Nate's exactly right. And it's a question I get asked a lot from people that are just starting to trade. And it's, what's that one tip you can give me? Or can you help me out this? Or can you help me out that? And I say, everything I've learned has come through experience, trading through good markets, trading through bad markets, and learning from your mistakes. So right now we're in a market where everything goes up and traders are making money going long. And should they, be punished for buying trash that goes up? And in my opinion, no. I mean, it doesn't matter if you buy trash and it goes up and you make money. What matters is, are you taking profits along the way? And do you realize that, it is trash? I think, and not be greedy. And, like I said, not holding, forever. But, the thing is that this market will change, whether it's in 6 months, whether it's in a year, maybe it's in 3 years. We have no idea. And I think traders that were lucky in 2020, if they're lucky in 2021, there's going to be a day where they have to adapt. They're not going to be lucky to just buy any stock and make money on it. The market's going to change. And if they want to continue to trade, they're going to have to change with it. So, that's the thing about being a day trader or being a trader in general, is that every day is different. Every market cycle is different. And you just have to learn from those experiences and change with them. So any way you can make money right now, I say go for it. I mean, even like I said, in fourth quarter, I was buying all these SPACs. I didn't do in-depth research on them. I was following the momentum. What does it matter? As long as you're taking profits along the way, not holding forever, enjoy the ride while it lasts.
Yeah.
And when the ride ends, look to adapt and change, how you make money and how you, how you see things.
Well, on that note, guys, look, first off, I appreciate y'all both being here and answering some of these questions. I know it's going to help a lot of people out there who are trading new this year or have been trading for years. So again, thanks, Nate, so much for being here, and Phil. And I'll have your socials on the description, as well as pop up when we start the video. So that way everyone can make sure to go find you guys and ask you guys more questions if they have them.
Awesome. Appreciate it, Alex.
Absolutely.